Fast Five is brought to you in association with the A&M Consumer and Retail Group. The A&M Consumer and Retail Group is a management consulting firm that tackles the most complex challenges and advances its clients, people, and communities toward their maximum potential. CRG brings the experience, tools, and operator-like pragmatism to help retailers and consumer products companies be on the right side of disruption. And Avalara. Avalara makes tax compliance faster, easier, more accurate, and more reliable for 30,000 plus business and government customers in over 90 countries. Avalara leverages 1,200 plus signed partner integrations to power tax calculations, document management, tax return filing, and tax content access. Visit avalara.com to improve your compliance journey. And Miracle. Miracle is the global leader in platform business innovation for e-commerce. Companies like Macy's, Nordstrom, and Kroger use Miracle to build disruptive growth and profitability through marketplace, dropship, and retail media. For more, visit miracle.com. That's MIRAKL.com. And Own It AI. Own It AI helps the world's leading retailers advance their e-commerce shopping experience with AI. To learn more, visit ownit.co. And finally, Ocampo Capital. Ocampo Capital is a venture capital firm founded by retail executives with the aim of helping early-stage consumer businesses succeed through investment and operational support. Learn more at ocampocapital.com. Hello, you are listening to OmniTalk's Retail Fast Five, ranked in the top 10% of all podcasts globally, and currently the only retail podcast ranked in the top 100 of all business podcasts on Apple Podcasts. The Retail Fast Five is the podcast that we hope makes you feel a little smarter, but most importantly, a little happier each week too. Oh, and the Fast Five is just one of the many great podcasts you can find from the OmniTalk Retail Podcast Network, alongside our Retail Daily Minute, which brings you a curated selection of the most important retail headlines every morning, and our Retail Technology Spotlight series, which goes deep each week on the latest retail technology trends. Today is October 30th, 2024. I'm one of your hosts, Ann Mazenga.
And I'm Chris Walton.
And we are here once again to discuss all the top headlines from the past week, making waves in the world of omnichannel retailing. Now, Chris, it's spooky season. Apparently, we say spooky season now. We don't say Halloween anymore. I don't know if you
do we? Why is that?
Yet. I have no idea. Probably Halloween has got some negative connotation, but I've noticed that my favorite retailers are calling it spooky season instead of Halloween. But we're going to stick with Halloween because it's your favorite holiday of all holidays. Maybe after 4th of July.
No, not at all. Halloween doesn't even make the top 5 for me.
I thought you loved it. You dress up like Darth Vader. You do all your stuff.
Yeah, but I still don't love it. I still get into it, but it's not in my top 5 for sure. No way. No way.
How do you distinguish this? How do you distinguish I get into it versus top holidays?
Oh, because it's all about the family interaction, the eating, the whole 9 yards. You know, I'd put 4th of July and Thanksgiving at the top of the list. Christmas, New Year's, those all trump Halloween for me. I don't know. We got to do a whole segment on what are the best 5 holidays. That's what I'm hearing from this conversation.
I feel like I don't even know you anymore. Like your profile picture was you as Darth Vader for a long time.
Because of Darth Vader, not because of Halloween though, you know? Like that's the thing, you know? It's like a totally different vibe, you know, for me with Halloween and Darth Vader. Anytime I can dress up as Darth Vader, it's a win for me and my family. And come on, let's be serious. Do you wear this Halloween rank for you?
Oh,
well, maybe not for my family. That's a good point. That's what I thought. I thought we've had this conversation before too.
Although I did meet my husband on Halloween night. Guess what? It's our 10-year anniversary of the fateful night that we met tomorrow. So we are, so that's a good part of Halloween, but it's so stressful. Like I already lost. We're moving next week. So I think my kid's costume got packed somewhere. So now we're like in emergency costume finding mode. It's just, it's terrible.
Yeah. I agree. Like after Christmas, Halloween probably puts the most pressure on the parent. You got to get the pumpkins carved. You got to get the candy out. You got to get the costume going. Lots of kids things to coordinate. Yeah, I'm with you, man. But
and let's talk about the decor. Like Sarah Post from Home Depot was talking about the giants now. Like since when does everybody have massive skeletons coming out of their yard? Like this is bigger than Christmas, I think.
Yeah, see, I'm big into that though. Like if I could do that, like I'm big into that as well. Like a giant Darth Vader, like those skeletons, that would be huge to put out there. A Darth Vader, like Halloween dressed up.
But it's not your favorite holiday. But you don't.
But it's not my favorite holiday. It's not my favorite.
Doesn't even make the top 5.
We're gonna come back to this. We're gonna do a special segment because we've already lost track of we've already lost track of the show from a timing standpoint. We're gonna come back to this. We're gonna do Omni Talk's 5 favorite holidays, and we should do that for December. Let's do that. Let's put that on the list.
All right.
5 favorite holidays. Let's debate them. The merits of them all, pros and cons.
All right.
All right. Let's get to today's headlines. What a great show. All right, in today's Fast Five, we've got news on 7-Eleven's plans to open up 600 new stores with a new design format, Simbe Robotics raising $50 million in Series C funding, Wayfair launching a paid loyalty program, Marks and Spencer's adding self-checkout to, of all places, their dressing rooms, and Doug Tiffan from AWS stops by to talk about AI investments in the fashion and apparel space. But we begin today with big, ultra low pricing news out of Amazon. And
there were more headlines out of Amazon this last week than I think have ever happened, Chris. There were a lot, but this one is of particular interest that we picked. Headline number 1, Amazon appears to be going aggressively after Shein and Temu on price. According to Reuters, by way of the information, Amazon is imposing severe price caps on what merchants can charge for their products on a new low-cost storefront that the e-commerce giant is preparing to launch. The company's price limits include $8 for jewelry, $13 for guitars, and this one blows my mind, $20 for sofas. Not sure what that sofa's made out of.
That's a great point.
The croissant lamp sofa that we were talking about a few weeks ago in the lightning round. Okay. But anyway, according to the information's report, which cited messages from Amazon to merchants and included a list of 700 items, Amazon plans to ship orders to U.S. customers directly from a facility in Guangdong, China. Did I say that right? Guangdong?
Yeah, you did.
China?
You nailed it.
Okay. All right.
Good enough is what I'd say.
All right. Adding that it was also planning to charge sellers lower fulfillment fees for items sold through the new storefront. Chris, why do you think Amazon is getting so aggressive on price against Temu and Shein?
Ooh, starting off hot, Ann. All right.
I
think because they're eating into Amazon's business. They have to be. You've seen all the recent numbers bear that out. You see the number of app downloads in the US, like the number of them is insane. Amazon's online store sales rose just 5% in the last quarter, which slowed down from a 7% increase in the previous quarter. So in the first quarter of this year. So, but more importantly, I think the other piece of this is it's actually a strategic assault on Amazon's e-commerce turf. Like Amazon has been known as the low price leader. And like we've talked about on this show, consumers gravitate to the offering that gives them the lowest price, which Temu and Shein are now effectively doing. So then I have to ask, the question for me is, what are the implications of this? The question I have to ask then, Ann, is, can they actually win this pricing war in this way? I don't know that they can at this point because Shein and Temu are pretty entrenched with consumers. Amazon's just trying to start up this new, kind of format in this vein, or this storefront in this vein. So I don't know that they're going to make a lot of inroads here. I think that this part of the business might be lost forever, especially until we know how regulation is going to continue to impact this direct to factory way of doing e-commerce as well. But what do you think?
Well, Chris, but I guess my question too is like, I assume we're talking the same manufacturers. I mean, from my experience ordering,
I would assume
Temu
so.
And Shein, is Amazon asking these manufacturers to make further concessions for Amazon than they are for Temu and Shein? Or is this is just standard across the board? Like they're already doing this, so it's going to be fine. Like that to me doesn't make sense. Like these factories already have these longstanding relationships with Shein and Temu, and who, just because Amazon comes in, do they have the same clout that they might have in the US market when we're talking about, what their relationships are over in China? But I disagree with you a little bit, and I'm curious what you think about.
Let's get it going.
So I think this could be a massive opportunity for Amazon, like huge. Because I think if you look at the brands, I was even shocked by this, but if you look at the brands that are most beloved by Gen Z, again, the generation that's holding the most buying power that any generation at this existing age, Amazon is consistently ranked among their favorites, and in some cases, even in the top 10 of their favorite brands. So I have to ask you, Chris, if you're ordering
another question,
I have to ask you this question. So if you're going to order, let's say like shoe organizers for your closet or something like that. Are you more
Hmm.
comfortable ordering that from Amazon as a US consumer? Are you more comfortable
Hmm.
ordering that from Amazon or from Temu?
It's a good question. Yeah, it's a really good question. So that's what's tough for me on this. It depends on the user experience because I talked to the folks at Temu for like 30,
Yeah.
45 minutes one day.
Yeah.
And they say while the direct to factory model is part of it, it's also the gamification and the user interface is also part of this. And so
True.
the
That's a
Amazon
good point.
experience, as you're describing it, operates and behaves differently. But with that said, like, could I, as a young consumer, be browsing Amazon and looking for storage organization solutions that are cheap? Yes, I could. So maybe they get some of this business, that they've been losing to Temu and Shein, but I don't know that they can ever get the total amount. I don't know that they can ever just like shut them out of the market at this point. I think that's the point I'm trying to make here is like
Yeah, true.
they it just seems like this is a hard game for Amazon to stand up and play entirely new because it's a different way of doing e-commerce. I don't know.
It totally is. But answer the question. Who would you rather order from, Amazon or Temu as a US consumer?
Probably Amazon. Yeah, I think that
I would
point I would
agree.
concede to you for
I would
sure.
agree. If all things are equal, like price is comparable, I mean everything else, the quality of the product, it looks the same, the images are the same. I would also go with Amazon. And my hunch is there's a lot of people in the US that would also go to Amazon before ordering something from Temu or from Shein if it's the same thing. So you make a great point, I think, about making sure that the gamification and the shopping experience is there. But I think if they can do it, there's a huge opportunity in the US for them.
Yeah, the other part about this, though, that you got me thinking about is seller ratings are also really important on Amazon. And so Amazon's always very transparent of that. So, like, if customers start to get dissatisfied with that, Amazon's going to probably showcase that a little bit more, too. So yeah, this is a really great conversation. I have no idea which way it's going to play, but you can tell that Amazon is definitely focused on trying to figure this out. All right, headline number 2. 7-Eleven plans to open over 600 stores under a new design by 2027. According to Retail Dive, 7-Eleven is planning to open over 600 large format food focused convenience stores in North America by the end of 2027, according to an investor presentation posted last Thursday. These locations will showcase a new prototype the company internally calls its new standard stores. They are, quote, more contemporary facilities, end quote, that offer, quote, a large product assortment and expanded food and beverage offerings, end quote, compared to the rest of its stores. 7-Eleven's new standard format is the first prototype the convenience retailer has launched since it rolled out its Evolution store concept in March 2019. Those locations featured 7-Eleven's Mexican QSR, Laredo Taco, as well as made-to-order specialty beverages, self-serve specialty coffee, a cold treats bar, mobile checkout, and delivery capabilities. 7-Eleven CEO and OmniTalk fan Joseph DePinto said on Thursday that 7-Eleven has, quote, leveraged key learnings from its Evolution stores over the past few years, and that beyond the increased food and beverage offerings, the new standard C stores feature, quote, many of the same elements of the Evolution stores, as well as in-store seating and electric vehicle charging stations. And this is also the A&M put you on the spot question this week.
Oh boy.
Better
Lay it
you
on
than me
me.
on this one. All right. Will 7-Eleven's new format be the move the convenience store industry needs to lessen its dependence on historically declining fuel and tobacco volumes? And how much should QSR players be looking over their shoulder to see what happens? God, they're so good.
They are. I mean, this reminds me of like when we left the NACS, the National Association of Convenience
Yeah.
Stores conference last year, Chris. I mean, Chad and the team at A&M are hitting on the exact question that I think was on top of everyone's minds when we left that show because these fueling stations are definitely doubling down on these QSR concepts and really making that their growth opportunity to like make sure that they have a reason for you to come to their location time and time again, whether you're filling up with gas or it's just the most convenient option. So I mean, I think this story is important, and I'm really going based off of what we saw 5 years ago, Chris. We went to this Evolution store in Dallas 5 years ago. They have 5 years of learning that they've put into these new concepts, and they're scaling this to 600 stores. So I think it's absolutely something that the convenience and QSR industries need to be paying attention to. I mean, they are making massive investments here. We are seeing investments in like full kitchen build outs to support the Laredo tacos. They are putting in new fixturing and infrastructure to support things like mobile checkout and scan and go, and in the future, possibly even entry and exit that would be controlled. They're doing, setting up better throughput for the delivery of fresh food items and then the supplies for the restaurant. And then finally, they have to really be thinking, and they did in the store that we visited in Dallas, about accommodating seating and an environment where people can stay now that EV chargers are a component of this. And we're really not seeing that with many other C-store retailers yet, with the exception of maybe Gelson's that's piloting this out in
Yep.
California. But I think that this investment, the pure investment that 7-Eleven is making here is a reason for us to be paying attention to this, both in the C store space and in the QSR space, because I think that there's a lot of room, and 7-Eleven is betting on this being their growth engine for the future. But where do you land? I mean, what were your thoughts when we were in that store in Dallas?
Yeah, I think my thoughts are similar. And honestly, I'm dying to ask Chad Lusk, who potentially is the originator of this A&M question and a former C-store operator, what his take is on his question. But, I think it's something that everyone has to be paying attention to. And the reason I say that is I think the key here lies in the names that 7-Eleven is using. They're going from evolution, taking the lessons learned from that, which, by the way, learnings is not a word. I hate when people say that. It's lessons.
Sorry, learning.
No, it wasn't you. It was in the article.
Oh.
The article said learnings. And then we all do it. I do it all the time too. So it's no big deal, but it's just a little pet peeve of mine. But they're taking the lessons learned from that and now calling this new format the new standard, which tells me this store is actually just an evolution against the trends 7-Eleven is seeing, like what you named, like EV charging, expanded food and beverage offerings, which, as you said, we heard at NACS. We shot a video of their evolution store. It was really impressive. We'll try to include it in the show notes as well. And the other point that I'd make is it seems like the right way to experiment when you're talking about retail physical footprints. Design big and bold and then work backwards, which is an interesting approach when you compare it in contrast to like how Wayfair tried to experiment with their stores, how Amazon's been trying to experiment with their stores in grocery. I actually like this approach a lot better because you spend a little bit more up front, but you get better answers in the long term and you see what's possible. So, and then the other point about this is they must have the confidence that it works.
Right.
They're thinking this is going to work if they're going out publicly and saying 600 stores. We're going to build 600 stores with this in a pretty short time horizon too. This is not like Target's, we're going to build X number of stores in 10 years baloney that they're putting out there. So that's my take. I think QSR and the convenience store industry both have to take a close look at this to see how things are still evolving.
Now you got me craving a Laredo taco, Chris, early in the morning on a Wednesday.
Or a Del Taco.
Oh, God. No.
Or a
not
Jack
a
in the Box taco.
Oh, my God. Now you're just spouting off QSRs. I was like sticking with the 7-Eleven one. Whatever.
I am a big QSR fan, Ed. That is true. You know that.
Oh, my God. All right, headline number 3, Simbe has raised $50 million in its latest funding round. According to Grocery Dive, Simbe, the robotics company whose aisle scanning bots are in several U.S. grocery chains, announced last Thursday it has raised $50 million in a Series C round led by growth equity at Goldman Sachs. The robotics company said it plans to use the new funding to expand into product areas, scale its solutions with global deployments, and, quote, pursue strategic growth opportunities, end quote. The company also plans to expand its team, which it has doubled in the past year. Simbe noted in the Thursday announcement that it unveiled this year new and expanded partnerships with retailers including Spartan Nash, ShopRite, Northeast Grocery, Carrefour, and 3 Albertsons banners, Market Street, United Supermarkets, and Albertsons Market. The technology company also counts BJ's Wholesale Club and Schnuck Markets among its current clients. Chris, what do you think that Simbe's $50 million Series C signals about the trajectory of retail technology investments?
Man, and I love this headline. I mean, this is one where we were like unanimous on this week, which tends to happen. There's usually 2 or 3 a week like that. But I love this. I love this announcement because it tells all of our listeners like why you should listen and tune into us each week, because we are trying to stay on top of the trends. We are trying to predict where things are going. And I feel like we had some insight into this based on the retailers we're talking to regularly, because I think it shines light on what we've been saying for the past few years now. And it's very validating of our overall thesis that number one, money is still flowing to tech that will show a return. Because what's the one thing the grocers have told us that have deployed the robots, Anne? What's the one thing? They've all said it.
They won't let them go. Like, they're just a part of the whole team at the store. Like, no one wants them to walk out of the door.
100%. Like they
Yeah.
basically say to us every time we ask them, you can take anything you want, but you cannot take my robot. And that's pretty telling. And the reason is because they work. You get inventory, you get pricing accuracy, you get planogram compliance. Plus, you get all the operational offshoots you can when you combine them with ESLs. So the industry is seeing it, which is again why I think all signs point to 2025 being the year of the robot. And by that, I mean the reach of the robot, not just continuing in grocery, but starting to extend deeper, like traditional grocery, but starting to extend deeper into other verticals in retail as well. And Goldman Sachs Alternatives seems like they tend to agree with that sentiment, at least from the size of the investment here and the round.
Yes. And Simbe's strategic growth opportunities that they're working on. We'll be excited to see what kind of retailers they land in next. And yeah, I don't have much to add, Chris. I mean, I think anecdotally, I will say that since we released that Schnucks video with the robot last year about this time, and even just after talking to the Schnucks team, and I'm still getting emails and direct messages via LinkedIn today where people are asking to get connected with them from other retailers so that they can find out more about why, like the why and the how related to the robots, because this is an area that people are seriously considering and seriously investing money in right now, like you said.
Yeah, and we got to talk to like BJ's too and see how they're working this thing. See how they're doing the robot too. Now that I think about it, we got to get on the horn with them and see what they're learning from this as well. All right, now let's take a break and welcome Doug to the show. Ann. Joining us now for 5 insightful minutes is Doug Tiffan. Doug is the head of solutions strategy for fashion and apparel at Amazon Web Services. Doug, first question, what is taking place in the fashion and apparel space right now? And how are you seeing retailers invest in cloud technologies?
So the rapid growth of e-commerce that was spurred by the pandemic is mostly stabilized right now. But what has changed is consumer behavior. And I believe it's going to continue to change. And the expectations now are kind of higher than level for the retailers and brands. So customers today, they're less loyal to brands and they're expecting great shopping experiences that are connected no matter where they interact with the retailer, whether it be online or in an app, in the store or in social media. So retailers must rapidly adapt and change, investing in technology to meet their customers' changing expectations. So this includes investing in AI and cloud technologies that power better shopping experiences like personalization or improving business processes like leveraging AI to create product images or product descriptions, and then using AI to create the next level of customer services that involve all these things before personalization, product data, all into one great customer experience.
Doug, inflation has eased, certainly. The industry has not yet recovered, though, to pre pandemic levels. For example, we're seeing supply chain disruptions, high interest rates, geopolitical uncertainties, and all this may lead executives to be a little bit more cautious about their technology investment. So I'm curious what AI investments you think are going to have the biggest impact on profitability and customer loyalty within the fashion and apparel space.
Yeah, fashion brands and retailers are concerned about customer acquisition, but mostly about customer retention. They're conscious of things like personalization and enhancing digital engagement, next level customer service, all with the intent of creating delightful shopping experiences. So the AI behind that can be in things like personalization, for example. AI can understand vast amounts of data like shopping history, browsing history, and pull all that together to give relevant product recommendations in session for each customer as they shop. Personalization can even reach into marketing. And instead of marketing to giant segments like we've done in the past, we can literally cater marketing messaging to the individual. Another area that I see investment in is product search and discovery. 60% of 60% of shoppers will go straight to the search bar when they hit a retailer site. And if they don't find what they're looking for within a few clicks, 80% of the time they're going to bolt for another website. So AI technologies can help letting customers search by using product images and statements instead of just keywords. They can ask a question and AI can identify items in that retailer's assortment that meet the need of that consumer. and then give them that offering. Shoppers can find exactly what they're looking for and then walk away with a great customer experience. And then finally, the last place I see AI investments are really in the customer service space. So AI-powered chatbots can offer 24 hours, customer help, and customers can come in and the AI can understand their intent and give them the answers they need to get to what they're looking for. That would be help with a problem or finding a product. And another version of a AI chatbot is personal stylist that I see happening a lot, where either in an app or in a website, a customer can go in and ask questions on like what to wear. Like, for example, if you want to find a dress for New Year's Eve in Manhattan, which should I buy? And AI can not only give you the dress, but also round it out with the handbag and the shoes to go with it.
So let's get you out of here on this. If we consider a long-term or take a longer-term view, what do retailers need to take action on now to drive more value in the future? Right now, right this second, Doug, what would you tell retailers?
Top of my mind is develop and enforce a complete data strategy. All the cool AI in the world won't help you if the foundational data is not in good shape. The second thing would be take your vision for a differentiated customer experience and invest in the technology that you need to support that vision. Anticipate that your customers' demands and expectations are going to continue to change. And so you want to make sure that you're positioned to be able to meet those changes. And then also think of AI as a member of your team. They're a highly potential team member that is capable of great things, but they need time and training to get up to speed. So start now. If your team is new to AI, get them started on internal projects, then some short ones to get some quick wins and build that muscle memory. So then they can turn around and work on some longer term strategic projects that could really deliver big value. And then finally, plan for the long term. Clearly define and communicate the vision for your organization to focus on. So as AI projects come up, you can make everybody knows they need to be aligned to those goals and help drive them. And just know that you're not alone in this. AWS and our partners are here to help to give you the technology and solutions that you need to power your success.
Thanks,
Great
Doug.
stuff, Doug. Thank you. Headline number 4, Wayfair has launched a new paid loyalty program. According to Retail Dive, Wayfair has launched a new membership loyalty program across all of its banners, including Wayfair, All Modern, Birch Lane, Joss & Main, and Perigold. I think Wayfair ascribes too much value to all those brands, but I don't know. That's just my opinion. The program costs $29 per year. They put them in every press release. The program costs $29 per year with rewards that never expire as long as subscriptions do not lapse, according to a company press release. Members get 5% back in rewards on all purchases, early access to major sales events, and free shipping on orders of any size, among other perks. And
yes,
are you buying? I have no idea which way you're going to go on this. Are you buying or selling Wayfair's new paid subscription program? Because as you mentioned at the outset, you are in the middle of a home move.
Yes. I'm selling. I'm not interested
You're
in
selling.
this. Well, let me clarify. Okay. As we've said with just about
so you're not
every
signing up. You're not signing up.
I'm definitely not signing up.
Okay.
As we've said, though, with just about every subscription program like this, it costs you absolutely nothing but time, and probably not that much time to try something like this. So if you want to put it out there and see who's willing to pay you for it and just get the data about how they're using it, like, go for it, be my guest. But
great point with subscription programs. Great point.
Yeah. But you get free shipping right now on Wayfair for anything you order over $35. And my guess is that the majority of people who are ordering things from Wayfair are at least spending $35. So that $30 a year is really of no value. And I looked in specifically, I went to Wayfair. I do have the tab open already.
Sure you did.
Anyway. But I went in there and I checked like price low to high, even their like under $20 section, which wouldn't qualify for the, free shipping. And it's just basic stuff like mugs, shower organizers, reed diffuse, like, that kind of stuff. And I think that if I'm shopping for that stuff, like I can get that faster and cheaper using Amazon, going to Walmart or going to Target to get all that stuff because it's really basic nondescript stuff. But pretty much everything else that you're ordering from Wayfair is going to be above that $35 threshold. And I don't see the 5% cash back as like something that you're going to use all that often. because Wayfair to me is so much more of like a once or twice a year time purchase time. It's not like something consistent that I'm going to time and time again, like Walmart or like Amazon. But you probably, I don't know, you love this, I think, right? This is your
Uh,
you're in
I kind
on
of
it. Are you
do.
buying or selling?
I
Like
kind
what?
of do. I'm
Explain to me
buying this
why
one.
I'm wrong because
Yeah, I'm
I
buying
don't
this
see.
one.
Okay, all right, why?
I don't know. I don't know that you're wrong. I think it's just perspective. I think the audience they're trying to hit is exactly the audience that they're trying to hit. I mean,
What do you mean by
I think
that?
well, so okay, if I step back, I think this announcement or this headline in particular, it shows just how left-brained Wayfair's management is, which and this type of idea works in instances where you're talking about things related to e-commerce. Like this is a great e-commerce idea. So first off, and right, Wayfair knows that everyone has subscription fatigue. So there's no way they're going to get someone to pay like $99 like people are for
No,
Walmart Plus or something
no
comparable for
way.
Amazon Prime. So they have smartly just computed the inflection point of where the customer sees value, and hopefully they're going to get the incremental revenue. So there's some portion of their customers that are probably not hitting the free shipping threshold, and the value is relatively equivalent to them signing up for this. And therefore, they're going to sign up for it because it just makes sense economically. And therefore, they're going to get more loyalty too in the long run because you get the 5% discount. And then people generally are the general concept around a loyalty program is you pay for it. You're going to shop there more often. That's just kind of tried and true axiom. But so, net, I think it's a very smart analytical left brain move from a retail company run by the most left brain CEO in the industry, Nerd Shaw. And, I throw a lot of shade at them, but, when it comes to e-commerce, they just get it and they understand how the economics of it work and how to drive incremental profit from thinking in this manner.
Am I just in like the outsider group? Like how often are you buying home decor stuff? Like that just
So
seems so
it's
crazy
all
to me.
It's all incremental. Well, you're the one. Yeah, I mean, I remember back when I made the argument on this show. If we played back the tape, where I
Yeah.
said like home furnishings is generally speaking about big purchases, moments in your life, like having a new
Yeah.
kid, moving a second
Right.
home, retiring, going to college. It's generally about that. But there are the top-up purchases. That's what Target has made its bread and butter on. There's like the throw pillows, the decorative things that you
Yeah, but
add, the
those throw
accents to the
pillows are
houses.
all over $35. Like you're not going to get
Oh,
out of
yeah.
Wayfair. Like
Yeah.
that's what doesn't make sense to me. Like I
Yeah.
guess you have consumers. I just would want to see the
Well,
data of like
if
how
you're
many
saving,
people are paying for
Well, the other
shipping.
point of this, if you're saving 5% on your purchases, the $29 gets to be a pretty economically advantageous thing to sign up for because 5% is $29 is not 5% of all that much too. I think that's another
Yeah,
point of this, which I think we probably didn't give its just due here. Now that I'm thinking about it as well, it's more than the $29 here
I guess. I just
or the
it's
free,
not
getting past the shipping costs.
it's
All
not
right,
for
let's
me,
close up.
Chris.
It's not you're just not into it. Yeah, you're not into it. But
No.
Wayfair's happy to know that you're shopping at their site
I
and
am
to deck out
shopping
their
with you,
house with all
Wayfair,
their wares.
but I am not buying your subscription program. All right.
Speaking of this, so Ann, before we move on, random
Yeah.
aside, we're gonna talk about this next week. But Walmart Plus half off right now.
Oh my
OmniTalk,
God.
we're official Walmart Plus members. I'm gonna do
We
all my shopping
are.
from Walmart this
Oh
holiday.
my
I think.
God. We watched Paramount Plus last night, Chris. We were like in it. And I already placed a grocery order. It was amazing. I'm like super into it. So yes, Walmart Plus. Big deal. Big time.
And fun tip too. All of those brands you're probably shopping on Wayfair are also available on Walmart, most likely.
Good,
So I would
good
check
hot
them
tip.
out as
Good
a
hot tip.
second
I know
option.
you have told me to use Google Lens to look at the furniture that I'm interested in and then see where I can find it for the best price. Just a little shout out to Google Lens again. Okay, let's move on to headline number 5. Marks and Spencer is adding self-checkouts in the dressing rooms. According to Chain Storage, the British apparel and food giant is adding self-checkouts to fitting rooms in its 180 clothing stores. The move is to prevent shoppers from having to get in line twice during the shopping experience, and the self-checkouts are expected to be rolled out to about 100 stores by early 2028. The initial plan is to add one of the checkouts per changing room area, with a number to increase depending on consumer demand. To protect against shoplifting, the stores would have staff, quote, hosting, end quote, the changing room areas to make sure customers did not leave without paying. Chris, do you think we're going to see other apparel retailers follow Marks and Spencer's lead in trying self-checkout in the fitting rooms?
Ooh, that's also a good question. I think sadly, no, but I'd say that I think they should.
Right.
There's a tell for me. There's a tell for me that Marks and Spencer's doesn't have this all figured out yet, and it's the what is it, the 2028 date that they're putting this. That's 4 years away, so that's kind of nuts. And the idea in general, Anne, raises so many questions, like how do you take off the security tags? How do you handle bagging? But if we step beyond all of those, like, what do you have to figure out things, and think about the possible, particularly in a world with RFID and overhead sensors, I wonder if this setup doesn't actually help to thwart theft more in the long run, because you can better monitor the garments going in and out of the fitting room, and you have controlled exit and entry points that can be monitored by a single sales associate. And then, of course, you don't have the double queuing either. So as an idea, I love that they're doing this. And I think we're going to see more experimentation of how ultimately it should work best in a fashion apparel setting. That's my take.
Yeah, I mean, we did the like security tag removal and bagging at the Zara in Madrid, and I think that it can be done, and especially if you have an associate right there. I mean, Uniqlo's doing this too, where you have to remove tags for their RFID based checkout. I mean, it can be done.
And with RFID, you don't even really need the security tags anymore.
True.
That's the other point of this, right?
Yes. And, in talking with RFID, we just, we tested this out, in H&M when we were in New York, and being able to like order, that's something that they're working on too at H&M, is how they can have transactions happen from the fitting room and you just walk out, because that is still the biggest frustration in all these apparel stores that have invested so much money in technology. You still end up sitting in a line, and it's one of the most frustrating experiences alive. So I think it's going to be really cool to see, to your point, what RFID enables and how that can hopefully speed this process so that they're rolling this out in more stores more quickly than 2028. And I just give a shout out to, we just interviewed Troy Sywick from Gray Orange, who talks about G-Store and how stores like H&M have used some of the RFID overhead arrays, like you were talking about, Chris, to help enable this kind of stuff in stores. I think we can get there, but that's a great podcast to just learn more about the how of it. And then finally, we're going to be going out to Lumen Field in a few weeks to shoot the Just Walk Out technology with Apparel in Seattle, and I'm really excited to see how that plays out as well, because I think that hits on this theft issue of, if there's a controlled entry and exit and then you can just walk out with that stuff. I think that's another way that we could start to see some of this apparel shopping experience changing for consumers for the better.
Which is all done with RFID too. That's why this story is so important to pay attention to. All right, Ann, let's close this show up and let's go to the lightning round.
All right. Chris, question number 1 goes to you. Walmart is doing a series of parodies on popular TV series like Yellowstone, Bridgerton, Real Housewives, Friday Night Lights, and more for their Black Friday deals campaign. Which one are you most excited to watch, or which series do you wish they would have parodied and didn't?
Oh my God. The Bridgerton one looks classic. Like, I can't wait to see what they do that one. Walmart is now selling a tiny house online for $15,900. The 19 by 20 foot expandable prefab house is delivered by flatbed truck and requires a forklift for unloading, according to the online listing. Were you to purchase said prefab house, what name would you give it?
Alone Time.
Nicely done. Nicely done.
For me or somebody, but I would definitely take that thing and put it in my backyard, and it would be time for myself, myself, and I. I
literally just thought of this. Mine would be absolutely prefabulous.
Oh my God. We went in 2 very different directions with
right.
Those
I literally just came up with that. I did not know that beforehand.
Question number 3, Game Changer, owned by Dick's Sporting Goods, launched Film Room, an app that helps tap AI to help coaches analyze game footage for youth basketball and volleyball games and shares those highlights with team members. Chris, what would Film Room call out as one of a strapping young Chris Walton's greatest basketball highlights?
Well, I'm not sure that anyone in my history of my 47-year-old life has ever called me strapping Ann, but thank you for at least thinking that that's what I look like in high school. But the answer for me is freshman year against North High basketball. Got sent into the game just to shoot the technical free throws to ice the game. That was my crowning high school basketball achievement.
So proud of you. It would be distributed to everyone on the team would get that footage.
Yeah, right. And no one would watch it, just like my basketball career. All right, and lightning round question number 4. A museum owner recently uncovered a previously unknown waltz composed by Frédéric Chopin. When was the last time you waltzed?
Does playing a waltz on the piano count?
Yeah, sure. Why not?
To actually dance. Okay.
You're dancing in your head. I was curious about more when you danced.
Oh, I don't think I've ever danced.
Because you gotta you gotta put your hand out like this for those watching and like all that kind of stuff.
Yeah.
You never waltzed.
I don't think I've ever waltzed, but I did have to learn one on the piano. I think I was in 5th grade with my piano teacher, Virginia Schmidt, whose perfume I can still smell to this day.
Virginia Schmidt sounds exactly like the name of a piano teacher.
Oh,
like,
she was a piano teacher. Yep.
You couldn't even make that up. Virginia Schmidt and her fancy smells. All right. Happy birthday today to Harry Winkler, Nia Long, and to the man who is the real reason Mrs. OmniTalk was a huge Glee fan, Matthew Morrison. Huge Glee fan, Matthew Morrison. And remember, if you can only read or listen to one retail blog in the business, make it OmniTalk, the only retail media outlet run by 2 former executives from a current top 10 U.S. retailer. Our Fast 5 podcast is the quickest, fastest rundown of all the week's top news. And our daily newsletter, the Retail Daily Minute, tells you all you need to know each day to stay on top of your game as a retail executive, and also regularly features special content that is exclusive to us and that Ann and I take a heck of a lot of pride in doing just for you. Thanks as always for listening in. Please remember to like and leave us a review wherever you happen to listen to your podcast or on YouTube. You can follow us today by simply going to youtube.com/OmniTalkRetail, where, believe it or not, more and more people are watching and finding our content every single week. So until next week, on behalf of all of us at OmniTalk Retail, as always, be careful out there.